Hi, this is Juliet Orfiano. Welcome to my video. If this is your first time on my channel, please like, share, and subscribe so I can notify you if I have a new video. This is the continuation of part 1 about investment property, other non-current financial assets, and assets held for sale. I discussed in part 1 about the following. First, investment property. Second, initial recognition. Third, measurement after initial recognition. Fourth, transfer to and from other classification. Number 5, presentation on the statement of financial position. And number 6, the recognition. Just click above or the link below this video to watch part 1. In this video, I am going to discuss the other non-current assets. The topics that I am going to discuss are the following. First, funds for future use. Second, cash surrender value of life insurance policy. And third, long-term advances and deposits. Other non-current financial assets. A financial asset is any asset that is number 1, cash, number 2, a contractual right to receive cash or another financial asset from another enterprise. Number 3, a contractual right to exchange financial instruments with another enterprise under conditions that are potentially favorable. Or number 4, an equity instrument of another enterprise. For the purpose of measuring financial assets at and after initial recognition, IAS number 39, Financial Instruments, Recognition and Measurement, classifies financial asset into the following 4 categories. Letter A, financial assets at fair value through profit or loss. Letter B, held to maturity investments. Letter C, loans and receivables. And letter D, available for sale financial assets. All of these classifications have been discussed in the previous chapters of this book. In measuring financial assets, therefore, we must determine first how the item is classified based on the categories enumerated. There are certain financial assets, however, that are not easily classified under any of the stated classifications. Examples are funds for future use, security deposit paid by the lessee to the lessors at the inception of a lease contract, long-term advances granted to officers and employees, and cash surrender value of life insurance policy. Funds for future use. Funds are in the form of cash and highly liquid financial instruments which the enterprise holds for specific purposes. Funds may be grouped into 2 categories: those that are used in current operations and those that are set aside for future use. Examples of funds used in current operations are cash items held as petty cash fund, change fund, payroll fund, purchasing fund, tax fund, dividend fund, and interest fund. Such funds are in the form of cash and cash equivalents and are immediately available for payment of current operating expenses, current obligations, or resources that will be classified as current assets. For this reason, this first category of funds appropriately form part of current assets and are generally included in the balance of cash and cash equivalents. The second category relates to those that are held and designated for some specific purposes in the future. These funds may be in the form of cash and other liquid financial instruments such as debt and equity securities. Some examples of items under this category are Plant Expansion Fund, Equipment Acquisition Fund, Sinking Fund, Preference Share Redemption Fund, and Employees Retirement Fund. Because these funds are intended to be used in the future, they are generally classified in the Statement of Financial Position as non-current assets. The accumulation of funds for an intended future use is made by the company because it is either required by a contract or it is decided upon by the enterprise management as part of its financing or investing plan. For example, there may be a provision in a bond indenture that the issuing corporation shall periodically set aside a specific amount for the payment of bonds payable on maturity date. In such a case, the enterprise determines the amount of the required periodic transfer to the fund, anticipating the yield on the deposit, so that on the date of maturity of the debt instruments, enough cash balance has been accumulated. To illustrate how the enterprise accumulate funds for such a purpose, assume that XYZ Corporation issued on January 1st, 2008, 10 million bonds that will mature on December 31st, 2012. As stated in the trust indenture, the corporation is required to maintain a separate bank account and make periodic deposit every December 31st, 2012. Based on the prevailing rate being paid by the bank to its depositors, it is expected that the deposits will yield 5% net of tax. The required annual deposit is therefore computed by dividing 10 million by the future value of an ordinary annuity of 1 discounted at 5% for 5 periods. Table number 3, future value of an ordinary annuity. Thus, 10 million pesos divided by 5.25256 is equals to 1,809,758 pesos. The following table shows how the fund accumulates. The following are the entries at the end of each year. 2008, December 31st, debit bond sinking fund for 1,809,758 pesos. Credit cash for 1,809,758 pesos. Year 2009, December 31st, debit bond sinking fund for 1,900,246 pesos. Credit cash for 1,809,758 pesos. And credit interest revenue for 90,488 pesos. Year 2010, December 31st, debit bond sinking fund for 1,995,258 pesos. Credit cash for 1,809,758 pesos. And credit interest revenue for 185,500 pesos. Year 2011, December 31st, debit bond sinking fund for 2,095,021 pesos. Credit cash for 1,809,758 pesos. And credit interest revenue for 285,263 pesos. Year 2012, December 31st, debit bond sinking fund for 2,199,717 pesos. Credit cash for 1,809,703 pesos. And credit interest revenue for 390,014 pesos. The payment of the bonds at December 31st, 2012 will be recorded as follows. 2012, December 31st, debit bonds payable for 10 million pesos and credit bond sinking fund for 10 million pesos. If the fund over the holding period has accumulated an amount in excess of what is necessary for the payment of the obligation, any remaining balance in the fund shall be reverted to the general cash account through the following entry: debit cash and credit bond sinking fund. In most cases, the cash balance in a fund is invested in some other financial instruments that will provide income and will generate additional cash and cash equivalents. Any returns earned by such funds are taken to profit or loss in the period earned. To illustrate, assume that the following transactions were completed by the ABC Corporation over the period that it is accumulating plant expansion fund. Number 1, cash of 4 million pesos is transferred to a separate bank account that will serve as plant expansion fund. Number 2, equity and debt securities are purchased using plant expansion fund cash for 2,500,000 pesos. Number 3, interest and dividends are received from plant expansion fund securities for 180,000 pesos. Number 4, additional 4 million pesos cash is transferred to plant expansion fund. Of this amount, 3 million pesos were used to purchase debt and equity securities. Number 5, interest and dividends received from the securities in the fund amounted to 420,000 pesos. Number 6, all of the equity and debt securities with total carrying amount of 5,500,000 pesos were sold for a total net proceeds of 7,100,000 pesos. Number 7, building was constructed at a cost of 5 million pesos and equipment were acquired at a total cost of 4 million pesos. Payments were made from the plant expansion fund. Number 8, remaining balance in the plant expansion fund is reverted to the general cash account. The following are the entries for the foregoing transactions. Number 1, debit plant expansion fund for 4 million pesos and credit cash for 4 million pesos. Number 2, debit plant expansion fund securities for 2,500,000 pesos and credit plant expansion fund cash for 2,500,000 pesos. Number 3, debit plant expansion fund cash for 180,000 pesos and credit plant expansion fund income for 180,000 pesos. Number 4, debit plant expansion fund cash for 4 million pesos and credit cash for 4 million pesos. Number 5, debit plant expansion fund securities for 3 million pesos and credit plant expansion fund cash for 3 million pesos. Debit plant expansion fund cash for 420,000 pesos and credit plant expansion fund income for 420,000 pesos. Number 6, debit plant expansion fund cash for 7,100,000 pesos, credit plant expansion fund securities for 5,500,000 pesos, and credit plant expansion fund income for 1,600,000 pesos. Number 7, debit building for 5 million pesos, debit equipment for 4 million pesos, and credit plant expansion fund cash for 9 million pesos. Number 8, debit cash for 1,200,000 pesos and credit plant expansion fund cash for 1,200,000 pesos. Cash surrender value of life insurance policy. A life insurance policy is taken by some enterprises covering their officers when the enterprise believes that the loss of their officer will significantly affect the entity's operations. In such an instance, the owner and designated beneficiary of the life insurance policy is the enterprise itself. When the company is the designated beneficiary of an insurance policy on the life of an officer, any premiums paid on the life insurance are recorded as life insurance expense. The cash surrender value on such policy also accrues to the entity and should be reported as an asset of the company at the end of each reporting period. The increase in cash surrender value during a reporting period is an adjustment to life insurance expense. Likewise, dividend received or receivable on account of the policy also adjusts the insurance expense. In case of the death of the officer, the insurance expense or prepaid insurance account should be adjusted. The claims against the insurance company should be established and the cash surrender value should be derecognized. Any difference between the amount recoverable from the insurance company and the total of the adjusted prepaid insurance and cash surrender value is recorded as a gain on insurance settlement. To illustrate, assume that on January 2nd, 2005, XYZ Corporation insured the life of its officer in a policy with a face amount of 5 million pesos. Annual insurance premium is 120,000 pesos payable at the beginning of each policy year. The cash surrender value increases only every anniversary date of the policy. The policy provides the following balance of cash surrender value at the end of each policy year: 2005, 0, 2008, 78,000 pesos. 2006, 0, 2009, 122,000 pesos. 2007, 45,000 pesos. The insured officer died on April 1st, 2009. The following are the entries for year 2005 through 2009. 2005, January 1st, debit life insurance expense for 120,000 pesos and credit cash for 120,000 pesos. 2006, January 1st, debit life insurance expense for 120,000 pesos and credit cash for 120,000 pesos. Year 2007, January 1st, debit life insurance expense for 120,000 pesos and credit cash for 120,000 pesos. December 31st, debit cash surrender value for 45,000 pesos and credit life insurance expense for 45,000 pesos. Year 2008, January 1st, debit life insurance expense for 120,000 pesos, credit cash for 120,000 pesos. December 31st, debit cash surrender value for 33,000 pesos and credit life insurance expense for 33,000 pesos. Year 2009, January 1st, debit life insurance expense for 120,000 pesos and credit cash for 120,000 pesos. April 1st, debit prepaid life insurance for 90,000 pesos and credit life insurance expense for 90,000 pesos. April 1st, debit receivable from the insurance company 5 million pesos. Credit prepaid life insurance for 90,000 pesos. Credit cash surrender value for 78,000 pesos and credit gain on insurance settlement 4,832,000 pesos. The recognition of the increase in cash surrender value in years 2007 and 2008 in the foregoing illustration requires a credit to insurance expense. Thus, the insurance expense for years 2007 and 2008 had been adjusted to 75,000 pesos, which is 120,000 pesos less 45,000 pesos, and 87,000 pesos, which is 120,000 pesos less 33,000 pesos respectively. Any balance in the account cash surrender value of life insurance policy at each reporting date is presented as part of other non-current financial assets. Long-term advances and deposits. Long-term advances and deposits fall under the category loans and receivables, which are measured in the statement of financial position at amortized cost using the effective interest method. Thus, what used to be simple entries for the recognition of advances granted by the entity and deposits paid to third parties are not so simple anymore. An initial recognition, these deposits and advances are discounted to their present values based on the yield or market rate of interest at initial recognition. After recognition until the date of settlement, interest revenue is recognized using the effective interest method. On the statement of financial position, the loans, advances, and deposits are measured at amortized cost. To illustrate, assume that X Corporation on January 1st, 2008 granted a 4-year non-interest bearing advance to its vice president amounting to 2 million pesos. The advance is to be repaid by the officer in cash on December 31st, 2011. On January 1st, 2008, the market rate of debt instruments with the same characteristics is 8%. The present value of the advance is computed as 2 million pesos multiplied by 0.7350 equivalent to 1,470,000 pesos. X Corporation shall record the advance as follows. 2008, January 1st, debit advances to officers 1,470,000 pesos, debit prepaid compensation expense for 530,000 pesos, and credit cash for 2 million pesos. Alternatively, 530,000 pesos may be recorded as a credit to discount on officer advances, in which case the advances to officers is recorded at gross amount of 2 million pesos. On December 31st, 2008, adjusting entries are taken up for the earned interest and to transfer a portion of prepaid compensation expense to compensation expense. The following table shows how the discount is amortized over 4 years using the effective interest method. Based on the given table, the adjusting entries on December 31st, 2008 are 2008, December 31st, debit advances to officers, 117,600 pesos. Credit interest revenue, 117,600 pesos. Year 2008, December 31st, debit compensation expense, 117,600 pesos, and credit prepaid compensation expense for 117,600 pesos. Notice that the amount transferred to interest income is the same amount charged to compensation expense during the period. Similar entries will be made in subsequent years until December 31st, 2011. On December 31st, 2011, the collection of the officers' advances will be recorded by a charge to cash and a credit to advances to officers for 2 million pesos. In a similar case, when a security deposit is made by the lessee to the lessor at the inception of the lease, the deposit, which is expected to be refunded to the lessee at the end of the lease term, shall be initially recognized as a receivable by the lessee at its present value. The appropriate entry is debit security lease deposit at present value, debit prepaid lease expense, and credit cash. The difference in the initial amount recognized for the deposit and the amount of cash disbursed is treated as prepaid lease expense that will be subsequently amortized through profit or loss along with the accretion of interest on the receivable. At each reporting date until the end of the lease term, the following entries will be made: debit lease deposit, credit interest revenue, debit lease expense or rent expense, and credit prepaid lease expense. Thank you for watching my video. I hope you learned something from this video. I did part 3 and continuation of this video wherein I discuss in part 3 about the assets held for sale. The topics that I discuss in part 3 are the following. First, when to classify non-current assets as held for sale. Second, measurement of non-current assets held for sale. Third, their recognition. Fourth, presentation of a non-current asset classified as held for sale. And fifth, sample disclosures in the notes to financial statements. Just click above or the link below this video to watch part 3. Don't forget to like, share, and subscribe on my channel so I can notify you if I have a new video. Once again, this is Juliet, a young Orfiano. See you on my next video.